Yesterday, there was some concern that perhaps these tax cuts would be phased in over 5 years, and there was allegations that this would possibly slow growth substantially in the U.S., with at least one big money manager saying that this would send the U.S. into a recession. Would you agree?
That's probably a strong statement. But look, our expectations for the tax reform are actually fairly modest, in the sense that we expect more of a tax cut than the tax reform, for the reasons that have been discussed for a long time. That is, the difficulty of passing legislation under the reconciliation rules in Congress and so on. I think the dollar suffered a little bit yesterday when the news broke out, but I think our estimation, the market has not priced in significant fiscal stimulus for the dollar, so I wouldn't really expect too much damage from this kind of back and forth.
Greg, what about the other markets? Vassili says it's fairly modest, but that reaction yesterday, particularly in the equity markets, would indicate the markets are sort of a little out on their skis. I mean, all they said was it's going to take a little longer to get to 20%. It wasn't a radical suggestion.
Well, it's not radical, but it kind of is in a way, because the markets and investors broadly have been expecting kind of this shot in the arm kind of stimulus boost. And by phasing it in, basically realizes the fact that it's not going to be that boost. And so I think that just recalibrated what investors' expectations, where it won't be such a near-term boost. It will be, if anything, over time. So it was just one of many disappointments that I think we're finding when we're relying upon tax cuts and other types of agenda items.
Which is the key point, one of many potential disappointments, because we're just starting this process. We don't even have the legislative language yet. And then we start going through negotiations and pay-fors, as they call them, and various things, curtailing, for example, business interest deductions, or curtailing favorable treatment of 401ks. Does that mean the markets are going to go through a fairly turbulent time here as they get disappointed again and again?
I still think the markets are not fully anticipating anything broad-based. And so I think yesterday's reaction was quite muted, quite frankly, as that's the first time it was leaked that would be phased out over time. So it's hard to ascertain what the percent priced into the market, but I don't think investors are completely over their skis. Nonetheless, what we've learned from the healthcare battle, that this will be a long process, and there's a real difficult road ahead in order to pay for the $1.5 trillion.